All right. Hey, everybody. This is Adrian Zdunchuk, CMT, Charter Market Ignition. Welcome to today's stream, to today's webinar. Let me put down music a little bit lower, quieter. Well, super excited for today's session. Welcome, welcome, welcome. If you are pretty much coming across this randomly, welcome for the first time, and I hope that you stay because this is the official kickoff, the grand opening for tier 3 of our Millionaire Speedrun. And what is a Millionaire Speedrun? It is a structured learning path from zero to hero, from $100 through 1,000, through 10,000, through 100,000 milestones, all the way up to the million, so that no matter how much money you have, you can basically know how to position yourself, because managing $100 is way different than managing $100,000. All right, the same 10% movement, win or loss, on a 100K account is going to cost you 10K, and the same movement on a $100 account is going to cost you $10. There is an asymmetry. The more money you have, the less aggressive you should play. All right, and that's a reality. It's way different to manage the money when you have a small account. This is typically where you need to apply a little bit more risk and probably, put yourself there on the spot to get liquidated several times. Try to climb steadily, but it's a very difficult takeoff. It's a very difficult process to get on, catch the spark, and then let it breathe, let it turn into a proper fire, right? But the good thing is that you don't have to go through the years of painful losses, through desperation, through depression, through blowing up multiple accounts. You don't have to do it. I did it, so you don't have to do it. So the option you have is either you take the long way and go for years of pain with no guidance, without any credibility, with no trusted party, with no trading buddy, with no mentor, with no like a friend, right? No arm to cry on. Or you can join a competitive trading community that is free for all, right? That is competing and thriving. Who's growing faster every month, all right? And today marks the opening of our tier 3 of the challenge, of the Millionaire Speedrun Challenge, and we are gonna start trading from $10,000 all the way to $100,000. And before there's gonna be whole live trading session, there's gonna be lots of other stuff. I'm gonna go through the rules for this round. This is gonna differ a little bit than the others. And for those who are new, you're gonna have an option to still join and sign up. Like I said, it's free. If you're coming across this randomly, like I said, if you're a fan of doom scrolling, don't worry about that. If you are serious though, then all you'll have to do to enter this kind of like a learning structured learning path is to be active. All right, that's a plea, that's a promise to yourself more than to myself. It's a promise to yourself that you're coming here for accountability, for transparency, for structured growth, no bullshit, no idiots, no backseat drivers, sorry passenger princesses, okay? This is not gonna be what's gonna happen here. So if you're here for a good ride, if you're here to actually learn how to properly scale from 10K to 100K, and we're gonna have this workshop going for over 3 weeks, starting from today until the end of the month, well, it's really worth it. And not just because I say so, but there's a whole bunch of people who won already. There's a whole bunch of people who got prizes on top already. There's $25,000 distributed, funded by our partner Weeks, by the We Exchange. Okay, we're hosting this. This is my partner of choice. I made a competition. I made a contest for a lot of centralized exchanges and for a lot of decentralized exchanges, honestly speaking, to find the best platform. And Weeks has come across as the most professional and the one that actually fits into what we're building here. So by watching this webinar, by watching this session, just maybe, there are no guarantees, but just maybe you're saving yourself years of pain, years of bear market crying, years of crying in a casino, years of losses, years of liquidations, and taking a little bit of a shortcut. If I'd had the guidance that I can give right now as the only CMT, the only charter market technician in Poland, I promise to you, I wouldn't have lost tens of millions of dollars in both trading losses and the lost opportunities. All right, so that's a reality. And if you're watching this, welcome. I'm really, really happy to have you. Please do let me know if you can hear me, receive me well, see and stuff, because there's a whole bunch of nice things that we're gonna discuss today. I'm gonna take a short sip. See this shit. While people are flying to moon and going to Mars, this is what we're struggling with, all right? Listen, I've got my third coffee. This is live. Someone asking, this is live. I've got my third coffee here. So if my heart stops beating, well, at least you know that I died peacefully and happy. Okay. But jokes aside, there is a couple of hundreds of people watching, so welcome. You're just fine. Alrighty. Listen, let me put on the rules. There's gonna be live trading as I promised. I'm trading live with you. There's no bullshit, fake P&L like most of the KOL scammers do. I tell you something. Okay, I've been here for a decade, and I want to say 100%, but that's not true. Like more than 90% of the people of KOLs, influencers, they are scammers. All right, I lost money to them. They scammed me, they tricked me, hacked me, rug pulled me. Took my money, borrowed it, and run away with it. Like they are literal scammers. Not because I say so, but that's what crypto really let be. All right, you are here facing a lot of grifters, a lot of fake ass, self-proclaimed gurus who have never traded in their life. All they do is take screenshots of some other people trading accounts, put it as their own, as if it was their own, setting some sort of bullshit pay groups that just lose money and evaporate and they just scam. And I mean, that's the reality. And I tell you something, okay? By this year, I used to think there were hundreds of people like me in Europe who are here to actually send the elevator down after they made it. They are here to mission, like for a mission, for a reason, that they are here to actually give something good to the people, all right? Without really asking anything in return. I used to think that, and I was wrong as hell. I was really wrong, all right? And the reality is there's maybe 2 or 3 people in Europe. I cannot name anybody else in my country with CMT credibility, with CMT knowledge. There's no financial culture here. It's taboo to talk about money in Europe at all. This is the old money, if you know what I'm saying, right? And the truth is that crypto, because of MiCA, because of tight regulations, is difficult. It has a lot of hardships, has a lot of difficult time here. And for years, over the years of like a free rodeo or Wild West, if you put it this way, there were a lot of, like I said, backseat drivers, a lot of people like some bank for free, and a lot of scammers that just basically took your money and ran away, and they're just living either in prison or they are living somewhere fine on their own island. All right, life is gonna come at them anyway. At one point, you cannot run away from it. But the reality is, the harsh reality is that you don't have options out there. You don't have credibility, you don't have transparency, you cannot have anywhere to learn accountability as a trader. If you are here because you want blind signals, you're not gonna get it here. But if you come here to get and receive the rods, and I teach you live with you, trade with you, show you how it's done, explain all the market mechanics as a CMT, as the only CMT Wall Street accredited person in my country, 40 million people, one of the very few in Europe. For a long time, I was the only crypto native CMT in the world, and there was a whole bunch of army of people kind of like getting inspired. Well, that's exactly what I'm doing. This I made it. You can do it anyways, but you don't have to go through years of suffering. Right? That's the shortcut that I'm giving you. So let's talk about the rules a little bit. All right, shall we? And to do it, I am gonna get you. Let's see that. Alrighty. So this is tier 3. So this is a $10,000 to $100,000 challenge. You're gonna have 3 weeks. It's starting right now. From now on, you can trade and take part. And for those who compete, there is a $20,000 prize. You're waiting, and two people are gonna take total of $20,000 home. All right. And here is a proof from Mike and Xap, who are both really nice Polish folks, by the way. Shout out to all the Polish people. And they received their rewards. They won on the P&L and they won on volume. All right, there's 2 categories. You can win either climbing the leaderboard, they being the best in the P&L, getting the best ROI, I should say, the best profit on the same amount of money, because we're all starting with $10,000 here. I mean, you can go with a little bit less or a little bit more. I mean, 10,000 is a reference point, all right? I cannot force you to trade whatever amount of money you want, but to make it fair, everybody should be starting from $10,000 because we're all competing here for $20,000 in the prize pool, all right? And the previous months, you know, there was Jacek in the month 1 who made more than 127% in 3 weeks and then won $5,000 on top of this. There's Mikey, there's Xap, who basically all of them won 7,500. All right, they won $15,000 total for taking 2 winner, 2 top volume and top ROI, top P&L. And this time there's going to be 20,000 for grabs. All right, so 2 people are going to take home $20,000 on top of their own profit that they're going to make. All right, and if you don't believe, by the way, 25,000 has been already distributed. All right, 10K in the first round, 15K in the second round, third round right now is 20,000. Okay, so on top of the profit that you're going to make, if you have a good month, you know, like I said, the whole concept of getting you from $10,000 to $100,000 is not that it go 10x, because that's probably impossible. I mean, I don't want to say it's impossible because it's possible, but it's unlikely. All right. I'm not expecting you to pull out like 3x, you know, in a matter of like a day. Some people are gonna do it. That's fine, right? I'm gonna show you why in a second. But the whole point is that if we set the bar very high, if we give you these milestones, guess what? You're gonna get farther away. You're gonna get fatter and better. Period. Right? If you're going for $10,000 or $100,000, you're gonna get more motivated than going for a 10% profit. If you're there to make a higher profit, you're going to get more motivated, especially when they know there is a big prize waiting for you anyways, right? So, yeah. And to show you that it's real, this is the accountability channel where everybody is learning accountability through posting and discussing their trades. All right. What went well, what went wrong, and they're sharing their wins and losses. So I just want to show you now how much green that is, that it's real money, real people. It's not fake. It's not like some scammers are faking P&L. Those are real people making real money. Here's a little bit of the losses. Here's a little bit of the green. All right. There's always going to be wins and losses, but all I want to tell you is that most of that, the vast majority of that, is absolutely great wins. 129%. All right. 38%, 40%. There you go. 15%, 44. Okay. 1,021%. How about that? Right. 771. Minus 5.37 from me back in the day, 1172, and so on, 6, right? So what I'm showing you here, see, I'm gonna scroll and it's gonna be a win, right? Scrolling and it's a win, scrolling and it's green, scrolling and it's green, right? So it's not accidental, it's not coincidental. Like, it's impossible that if you keep on scrolling this way and you see only wins practically and just a bit of losses, that is due to a chance. All I'm sharing is that this shit simply works. It's changing lives. It's giving you a rod, okay, to learn, to teach you how to fish, and it's really working, right? And not because I say so, but because those are real people, real money, real profits, and they're just like you, all right? So in those announcements, like I said, round one, round two paid out 25K already, and that's great. There is a real accountability where people are. That's a requirement. You have to be active. You have to, promise to yourself that you're not gonna be You're not gonna be like a. I'm opening something that is worth millions of dollars basically to you, free knowledge, right? 10 years of my experience I'm putting right in front of you on a silver plate. All you have to do is to be active. All you have to do is just take it, all right? And well, how to participate, all right? If you're not a member yet, if you're not signed up yet, like I said, it is free, all right? It is free. All you need to do is to go to, let me take it out, this one. All right, all you do have to do is basically go for here, right? We're on the Whoop, and it's at the Bird Nest, basically, Millionaire Speedrun, all right? And all you have to do is just join waitlist. I showed you how the other day, but well, it's a little bit complicated, so I apologize. One thing that you might want to know is that I'm reading your feedback. I see it. And this next couple of weeks, we're going to be working alongside the Weeks team and our team together to basically simplify as much as you can so that this registration process is as smooth as it gets. It's super fast, simple, user-friendly, and so on, so that even when it's your first encounter, you're watching this for the first time, you have no idea how to trade and so on, you're going to be able to go through it very, very fast in a matter of a couple of minutes, all right? So that's where we're heading until now. Bear with us. And is like, to join the waitlist, you need to sign up with the link, all right? The link is here. Basically, go and copy paste it into your browser, sign up. It takes a couple of seconds, couple of minutes. You don't have to do KYC, all right? Weeks doesn't force you to make a KYC. You can apply to get all the bonuses basically in the world. There's like a welcome bonus for everybody who signs up. Once done, just put your user ID, all right? User ID, here's my account. User ID is here in the upper right corner. There is the copy paste button, okay? On the UID, that's your user ID. You just copy paste it here, click on continue, and that's it. You just put in your email. We need to bind your email to know, going to send you email confirmation and stuff like that. Agree terms and conditions, join. And it's going to take you and register you, all right? So it's as simple as that. You're joining on a wait list. You're joining to be on this program. I already have access to this simply because I already showed it the other day. But that's the whole point, right? And we do all the rest for you, right? So the condition is that in order, like Weeks is paying for your access, if that makes sense, right? To train on their platform, and that's what makes it free, right? It's a free deal for you. So it's not kind of like that there's like some hidden costs. You're not paying me anything. You're not paying them anything. You're choosing them basically as your platform of choice, and well, and that's as simple as that, right? It takes couple of minutes, maybe just need to go through the platform, connect your Discord. Let me show you real quick, all right? So that's where it may get confusing on the website. You need to go to your profile, upper right corner, and you need to connect. All right, you need to connect your account to Discord. Just need to click here on the Discord right there, add it, and it's gonna take you and it's gonna add you, integrate, get you all the roles and so on. All right, and we have the team basically watching. If you're active, if you're inactive, you're gonna lose access because we don't take backseat drivers. All right. The only requirement to make it free, to have all this 10 years of experience and working things, right, that set people profitable and set them on the journey on independent trading or profitable, is you need to be active. So there's like no bullshit accepted, right? No idiots allowed, no free drivers, no dodgers, no anything. Just be serious, and that's it. All right. Alrighty, so that's pretty much it about the rules, and it lasts until 30th, basically of April. Right? Let me show you maybe real quick. This is the leaderboard. All right. This is the Bird Nest Millionaire Speedrun round 3. This is official page of Weeks, and you have 21 days basically and 5 hours until it ends. All right. So this is what's happening. You're gonna climb a leaderboard. There's a volume rank. Number one at the end of the month is gonna win. Number one on the ROI is gonna win. As simple as that. Okay. That's it. So before we go to the live trading, let me put one more thing out. One thing that I want to show to you, all right, is that I've become an affiliate, so that you can tell more easily that there's, again, no hidden stuff. There is no like hidden paid partnerships and stuff like that. I'm affiliated with Weeks. I'm their official affiliate partner. This is the badge that they have next to my name, so that there's like, I'm not hiding partnerships. I'm very open, and I'm very grateful, and I'm very honored to be working with them, because they were my choice of an exchange to welcome you to the Millionaire Speedrun. All right, so welcome, and yeah, it's gonna feel like home to you. All right, so that's about it. Let me put one more thing for you real quick. There is gonna be a Q&A part. All right, we're gonna head to the live trading part in a moment. Like, we're gonna go through charts, and I'm gonna teach you, how to make a trade, and how I'm trading, basically the methodologies and so on. Something that we did before, but just run through it real quick. And but before we do it, just if you're here watching this, I truly appreciate if you just share over this tweet, or if you're watching that on YouTube, show this to your friends later on. I know there's a lot of people basically changing lives because of watching this stream, not because I say so, but because that's what I said, right? There's a public record, and it's absolutely incredible. And one more thing is I'm searching for a tweet that I cannot see right now. Anyway, but the dashboard. All right. Oh, okay. One thing I know is when you join the Discord, all right, there's just a bunch of channels that you need to watch. There's community channel, there's trade of the day. Let me show you real quick. All right. Let me show you that real quick. So there is the community channel. Guess what? Where the community aggregates. There's the trade of the day, where I am sharing my trades, where I'm showing you and guiding you exactly why I'm taking up some trades and stuff like that. So this is something for your understanding. All right. This is risk management, where you have daily tips about risk management coming from the CMT. Right. So about correlated trades, and how to manage crisis, how to check correlation, basically how to avoid something very simple, as in, for instance, treating your equity curve as a chart, right? You can run moving averages on it, you can run some indicators on it, and watch just if you were watching price chart, so that that when the trend is slowing, when there's an inflection point, perhaps you're starting doing something more, or overdoing some strategy. All right. And just treat it like a chart, and all of a sudden you're going to trade your own equity curve, if that makes sense. All right. So you're going to master the very core of trading there, right there. So transparency is, like I said, the dashboard that I showed you right now. The accountability is where you share your where you learn accountability. You explain all your wins and losses. You take all the trades. You go and, like I said, just discuss what went well, what went wrong, and that's what truly matters. This is the 100 and 2000 challenge from the previous two chapters. This is 10K to 100K with the previous tier for me ending up being total, I think, 12% profit right after it was, I think, interrupted, but there was like a 40%, 49%, I think, the next day. Either way, the previous was 90% for me, right? It's all shared, kind of like unproven. So two of two are profitable, and this was real money. Some people ask me, okay, why did you trade small money? Well, guess what? Because I'm trading with everybody else. Okay, if we are trading all from $1,000, that's my starting capital. I want to make it equal for everybody to join. All right. So right now we are trading $10,000 to 100K. There's going to be a new channel that I'm going to create right after this one, right after this session, and we're going to take it basically there. I'm starting with $10,000. All right, and yeah, let me show you here. All right, so this is my account. what I'm gonna do is I'm gonna show you first of all that this is real money. All right, this is the futures account that I had, but I want to transfer those remaining money, okay, to my futures account. Okay, I want to get it from the founding account to. Okay, I think I need to convert it to USDT. All right, but I want to do it P2P. I want to go. Okay, let's do transfer here first of all to futures. So you can only transfer USDT to futures. All right, this is the remaining reminder that was there. Transfer, withdraw, deposit. What can I do with this? Buy crypto. All right, let's see. Buy USDT. I actually never did this, honestly speaking, this way. So let me just check if I can transfer that to the spot account then. From the founding account, transfer this to spot account. All right, and I'm gonna kind of like go on the spot and just make it to $10,000 so that you can see that this is real money. And I'm gonna go to spot account, trade now. There you go, USDC, USDT. I'm gonna trade it to USDT and move it to futures account. All right, so I'm gonna buy. All right, I'm gonna sell all this. All right, just go for it. I don't know, go market, doesn't matter. All right, sold it, boom, go back and transfer that to futures account. All right, but I don't want to transfer, let's see, I'll transfer the whole thing and then take it off. Okay, so I need to withdraw $818. Okay, that's exactly what I'm gonna do, so that I have equal of $10,000. Boom. All right, so now I have $10,000 basically in the futures account that I'm gonna trade with you live. We're gonna go and head over to the charts. We're gonna see, and by the way, if you have any questions, all right, drop those questions in the chat, and we're gonna take it from there. All right. I was just scrolling through some comments real quick. There's hey, long time no see. They're just fine. Everything is fine. That's great. Over a couple of hundred people. Yeah. Anyway. Yeah, cool. So, listen, what we're gonna do now is, if you have those questions, just drop them, okay, in the chat, and I'm gonna take a couple of minutes later on after we do some trading, and we're gonna tackle them. Until then, let's go through the chart check, okay, and get a little bit of the temperature, see what's happening on the chart, so that we get a little bit of the text. Okay, one thing more, and again, this is a grand opening, okay? This is like not fully immersed, trading per se yet, right? Because, well, guess what? This is grand opening, right? So I need to introduce new concepts to new people. How I didn't tell how it's gonna differ and how it's gonna be different from the previous tiers. So the previous tier that we completed was $10,000, was $1,000 to $10,000. All right. The winner made like 60% or so, and it's in my pinned tweet. And how it's different. First of all, we are trading at 10x the amount. All right, we're taking $10,000 to $100,000, and if you make 50%, that's gonna get you 5,000. Okay, you can live with that. If you lose 50%, it's gonna sting you more, approximately, right? So what matters and how it's different is that we are climbing here on the curve, okay, on the risk aversion curve. So the more money you have, the tighter your risk management should be. The more money you have, the less risky jumps you should have. The more money you have, the less leverage you should apply. All right. The more money you have, the more your fees are going to cost you, the more your funding is going to cost you. All right. So the more external factors, the more importance of the external factors is going to come into play as you make calculations. Right. So for instance, every single time, instead of, for instance, risking 2% of the account at a time, you may consider risking 1.85, right? To account for the fees and to account for all the slippage, to account for all the market orders, for the bigger size, for the funding and stuff like this. All right. So you need to acknowledge, for trading with a bigger size and less risk. And well, otherwise, if you're fine taking big risks, it's gonna cost you 10K if you blow up. All right. So we don't want to blow up. We want to show that it works. We want to have month free of free profitable. And well, that's exactly what I'm gonna guide you through, right? And the previous lessons learned, right, is, for instance, that if your equity curve is in a drawdown, you remember that? If your equity curve is in a drawdown, you need to basically, for a moment, just take a half of the trade, half of the size at a trade at a time, all right? Because if your equity curve is down, just like I said, imagine your price, equity curve, the price of your account just goes down, then it means there's something clearly wrong. It's in a downtrend, okay? If it's in a downtrend, it means you're repetitively making some mistakes. If you're making some mistakes, cut the position, all right? And start thinking, okay, what is going on wrong here? And then only focus on the most confirmed setups, right? And remember, keep in mind that if we are to trade different regimes, I'm gonna show you in a second and explain under the charts, is that you need to establish the regime that you're in, okay? And if you want to compete for the prizes, if you want to grow fast, if you actually want to go sprint and speed run from $10,000, $2,000, $100,000, you cannot do it through one trade, okay? You need to do it through multiple trades. You need to do it through the frequency. So the only way to win in the sprint against everybody else, where you're all competing for the same price, well, is to free frequency, all right? So it's impossible to win the competition and go and grow very fast, where we're all starting with the same capital when you're taking no trades. So we can only win if you take enough trades, all right? Some of them are going to be losses, some of them are going to be wins. Last month win rate for me was 40%, and I still managed to be profitable, all right? So you need to either decide, okay, this is the range trading regime, okay, where we take kind of like deciding, okay, what sort of ranges we're trading in, sideways locally, or we are in the trend trading regime. Most importantly, the best performing ones are the trend trading regimes. And if you take those, right, all you have to do is to trail profits. So trail stop loss instead of taking profits, all right? Cut the winners is not the strategy. Cut the losers and let the winners run. This is the strategy. This is what performs the best. Let's go to the charts and go right over here. All right, so let's start. We are looking at the daily Bitcoin chart. I'm gonna show you a couple of those. Okay, we're gonna get like a B Pro chart, and we're gonna take a 4-hour momentum chart, and then we're gonna take the week's chart. Alrighty. All right, so this is the daily Bitcoin chart. This is the 200-day moving average, the one in the background. This is the 200 B Pro trend line. Okay, so it's a little bit more sensitive 200-day average. So trend is down, clearly meaning the bear market. That's 200-day moving average. When it moves down consistently, this is the definition, technical definition of a bear market. So we're in a clear, very defined, and see how steady that decline is, right? We're in a very clear and steady phase of the bear market. Right now, we are below the key averages, somewhere around the critical volume potential reversal point that you're looking at, all right? And why that matters is that if the market bounces, and it has a lot of reason to bounce in April, like I have no idea where the market goes. Some people say you change your mind every day. Like, first of all, probably it comes from the fact that so many people confuse the time frames. Like the market, Bitcoin, oil, S&P can be bullish, bearish, and neutral at the same time. You know why? Because on a daily chart, it's going to tell you a different story. On an hourly chart, it's going to tell you a different story. On a 1 minute chart, it's going to tell you a different story. And it's all true and it's all correct. So it's a matter of preference. It's a matter of time frame. Okay. So if you pick the right time frame, that's the point. You pick the right time frame and the right trade for the right time frame. So Bitcoin can be bullish, bearish, and neutral at the same time. It can be bearish on the daily, it can be bullish on the 4 hour or something, and it can be bearish on the 5 minute again. You know what I mean? So it's like infinitely complex, which is why it's your job to pick the right time frame. But from what I'm seeing here right now, first of all, we had this nice little, bearish flag that kind of like got arguably invalidated. It got penetrated back below the breakout level, which basically tells me, first of all, the market is not really in the bear market, in the bear flag mode anymore. But what we know for sure is that this is some sort of like a consolidation. It's a reaction after decline, right? So they're like Elliott wave practitioners, for instance, will tell you, okay, we have a motive wave of the bear market, secondary corrective wave, right? Motive wave of the bear market, secondary corrective wave. And that's how it works. The bigger trends, the bear market consists of secondary movements, right? The motive waves, the impulse waves, and the reactions. Impulse waves to the downside and the reactions. But the dominant trend is downside. And those smaller tides, they also consist of daily noise, of daily fluctuations, those intraday trading that we're going to do. All right. But it doesn't change the fact that the dominant trend is going down. So by definition, if you're holding on to Bitcoin in 2026, you're losing money. All right. And that's what holding does. So the only way not to lose money in the bear market, first of all, is not to participate in it. Second of all, is to trade it. Right? But remember that trading it, you're trading something that is either down or flat. So if you're letting your longs for a medium or long term, you're going to lose money because on long term, the market goes down. So the only way to set it for the wins is to track local, medium term, and at best, secondary, that is the 3 weeks to 3 months trades that are going to be potentially to the upside. Like, is it possible, for instance, that we're looking at the bottom? Yes, sure it is, right? For the medium term. Downtrend on the bear market side is unbeatable, is undeniable, and we're going down. Okay, so it's not a matter of bear market reversal. It's not something that, okay, like this bullshit is going to reverse and put it to $500,000 tomorrow. That's not how it works. The trend is down. The bear market regime is here, which means that by definition, you're going to see only motive waves to the downside and some local interruptions. Right, but those interruptions are likely going to be steep, is likely going to be short-lived, maximum secondary, that is 3 weeks to 3 months, like a medium-term perspective. All right, but in the long run, if you keep holding and keep buying Bitcoin right now, you're going to lose money, and guess what? You're going to probably lose a little bit, like 50% of the money more. So whatever you put in from here, regardless you buy here or here, you're probably going to get about 50% less by the end of the year. Not because I say so, but because those are the numbers, right? Season-X data from 2010 all the July 2025 6, from April 7 all the way until the year end. In the midterm years, you're losing minus 48%, right? 100% of the time in the bear market years. So statistically speaking, you're looking at 48% down cut basically from the prices you're seeing here. 50% down is like 35,000. Okay. So I have no idea if we're going to go there. I'm just saying that this is what you can expect. And what really matters is that you are aware of the context. So if you are here to long the bear market, I have bad news for you because you're going to lose money, right? Unless you choose and go down on lower time frames. So the long-term trends here are emergent. It's dominant downside. What if we break upwards? Well, that'd be nice. That'd be nice. Maybe the shithole of the crypto's Twitter space is going to get a little bit of a nice brief change window, like a fresh air, okay, open. But otherwise, we are sideways. We are in this local, temporary, medium-term correction that honestly lasts already for 2 months, okay? So we are expiring already pretty much a normal correction time that lasts anywhere between 3 weeks and 3 months. Just keep that in mind. So we don't have probably much time left in this type of a movement. Maybe it's going to be like a one shot. Maybe immediately it's going to break down. I have no clue. Guess what? If I had, I'd probably be a multi-gazillionaire, trillionaire, and big bigger than Warren Buffett and all the Jeff Bezos combined. But no one knows that. But it doesn't stop us from making the right guesses. So what we're looking here, just a bunch of, understanding. There on the top clip, okay? On the top clip, you're looking at an RSI and a 50-day RSI. Momentum, all right? The RSI is a relative strength indicator. It tells you the up days, the participation of up days against the down days. If it moves up, it means there are more up days than the down days, okay? And that's just in the form of an oscillator from 0 to 100, and it just oscillates between those and never mathematically can go outside of those bounds. And because it's an oscillator, it goes from oversold or overbought. But if the market is oversold, like here, it doesn't mean that it's bullish. It means it's extremely bearish. All right, that's what most of the people get wrong, because they say, oh, it's like a RSI is 14, so the market is gonna like run up immediately. Like, that's bullshit, first of all. Second of all, here is proof. We got oversold here, and we're pretty much stuck in the same place after 2-3 months. All right, so that's not true. You had some little nice and bumps, okay, but that's not true that the market is bullish when it's oversold. As a matter of fact, RSI confirms, like I said, when you focus, when it goes down, it means there are more down days than the up days. So if it goes down, and if it goes down a lot, it means there are huge amount of down days against the up days. All right, so if anything, it tells you it's extremely bearish, not bullish. It just confirms to you that you have just seen enormous amount of pain and falling in supply and selling. That's what it tells you. All right, it may be a leading indicator because of the contrarianism, because if many people say like there are a lot of selling that happened, then maybe there are sellers exhaustion. Maybe those sellers are exhausted anymore. All right, so if those sellers are exhausted, maybe there's going to be some little bit nice of a bump coming from the short closing. All right, because if the sellers are tired, if they're closing their short position, well, there's a removing of this, like if someone's holding foot on your neck, right? And if they take off the foot, basically you can expel, you get like an inhale, right? You can just expand, you can take a breath. So that's what market does, right? You have a big heavy foot, just leg on the Bitcoin's neck here, and it's being released. It's slightly being released, but it's not released like fully. You can tell, because otherwise the market would have gone up, but it's just going sideways. So it's keeping the pressure. The supply pressure is still existent. The rallies are sold. There is no much conviction. There's a lot of extreme fear, the pessimism and everything. But that's how you read it, all right? And locally, check again. Now that you know what the RSI stands for, you can tell and smoothen it out. This line in the background is 50-day moving average. Okay, so it smoothens out basically. What is that? It smoothens out the RSI movement. So locally, it moves up. So we are on the local move up from last month, basically on RSI. It's slightly moving higher. So we are slightly on the 50-day basis seeing a little bit more up days than the down days, but it's like 50. It's like right in the middle. It's like no man's land. It's in the middle. It's not bullish per se. It's neutral. And we have just regained neutrality. Okay, so getting back to neutral after shit time, it's not a big win if you ask me. All right, but yeah, so we are in the local kind of like a neutral area. It's like 60 right now, 50, 47, 48, and a local incline coming from the fact that again we have regained the stability. We're stabilizing. Is that the word? We're going stable. We're kind of like, just neutralizing all the bearish pressure around the volume cluster. So this volume cluster, as I explained in the previous webinars, basically tells you that this is the congestion at this price, where the red line is. This is, well, like a POC price, point of control, whatever. This is the volume at which, this is the price at which the volume was the biggest, right? So the biggest volume typically appears where there's biggest liquidations, right? The volume happens when there's a match on a transaction, when there's a match on the buying and selling. When there is a match on buying and selling, well, there is a worth of trade total closed, hence money that exchanged the hands, okay? So that means that this particular region And it's not about the level per se. There's no like magical line that needs to hold. It's all noisy, it's all chaotic, it's all random at times. So just what you need to do is watch the area of interest, and this area of interest is all that you need to know, right? That there's big volume cluster basically coming from the volume from the market. The market is telling you, not the fake scammy influencer. The volume, the market is telling you this is the area to pay attention to. This is the market paying attention to these levels. All right, so we are around these levels. So guess what? If the market kind of like finds stability and there is refusal to decline, perhaps it's getting ready for some, short upside movement. I have no clue. But if the market were to bounce, I wouldn't be surprised if it bounced from here. And guess what? If it bounces, then where is the resistance? Well, maybe at another volume cluster, right? Where was the previous selling? Because that's the point that, the previous traders that lost money, that got wrong on a trade, this is where they get redemption. This is where they get break even. And getting break even in trader's mind and investor mindset, investor psychology, is more important than winning because of loss aversion, right? There is a great book that I kindly send everybody to. It is by Daniel Kahneman. He's a behavioral economy Nobel Prize winner. All right, he explained hundreds of biases, cognitive biases that come with information processing mistakes that we have, like remembering stuff badly and and so on. At times, like I go for a walk in a forest. I think I'm turning left, but then when I rewind and watch, what someone else told me that I did, I took the right. I just mistakenly remember stuff, and and it's just the previous day. And what should I say about multiple years back, for instance, right? So we fall for a lot of mistakes. We fall for a lot of human information processing biases, and a lot of cognitive biases, and a lot of, I should say, emotional biases, right? You cannot control emotional biases. You cannot control feeling overconfident, but you can control yourself, your reaction to it, your behavior. That's what matters, all right? So we fear losing more than we love winning. That's the loss aversion in principle. And that's the human nature, okay? We fear losses more than we love winning. There's misequilibrium. There's this lack of equilibrium. And as a result, that's the reason why certain support and resistance levels work, all right? Not because I say so, but that's how human brains are constructed. That's how people's brains are constructed. And that's where the next cluster of resistance is, right? So it's 86 all the way down to like 93. I have no idea if we get there, but if we do, guess what? There's another reason. There's another confluent indicator coming from the moving average. And guess what? If this 200-day moving average comes right now at the same area of interest, at the same 88 region, close to $90,000, right? And remember, I explained this round number magic, before, with like $90,000. Why certain round numbers are more important than the others? It's just in our minds, right? Our mind assigns some special importance to those levels, even though they are completely same, right? They're absolutely the same as every other number. But us putting more there, like $90,000 is an easier number to remember, to memorize, than 8957.37. All right. So we use those mental shortcuts, those heuristics, those easy to remember formulas, like buy the support, sell the resistance, and we make them real through our actions. That's what makes the support and resistance work. This is the self-fulfilling prophecy, aside from some scientific reasons, okay? So if we do bounce here, right? Well, first of all, you will need to have a proper reclaim above this 200-day BPRO trend line first, right? Over $75,000. If this 76K gets replaced, this is where I would potentially expect like 85,000, 95,000, right? Something like that. I have no idea if it does happen, but if it does happen, it probably is going to happen soon. It probably is going to happen in April. That returns approximately 19% seasonal return over the years, right? Which is basically making, April is one of the best months, if not the best month, depending on the time frame that we look at. But in the end, if it is supposed to happen, it should happen soon in the next couple of weeks, and we're going to be here to witness this. And if this lands, perhaps it's going to get rejected at 75. I have no idea what it's going to do, right? But that's exactly why we should be ready for the scenarios. But If it gets upward, I do expect resistance at around $85,000, $95,000. So if you're holding some medium-term longs, medium-term positions, you know, and this is a bear market, that's probably as good as you're gonna get it. So if you're gonna be lucky, I should say, if you're gonna sell it there. Otherwise, the volatility is down. This is the ATR indicator, right? ATR measures, takes the widest point and the highest, the widest difference between the lowest point and the highest point within a certain period, here 14 days. So it measures this, right? If the market goes stronger, the trend develops, the volatility is going to increase, because that's what trend development means, right? So here, for instance, volatility grows just like it did here because the trend accelerated. So it measures the slope of the trend change, right? If the trend goes sluggish like here, the volatility is going to be down. And if the volatility is down, it means this is a pretty much range trading environment until proven otherwise, right? So we are stuck in a range trading secondary correction that is lazy, that is barely making it to the new highs. If you get some local spike up, this is probably going to be the last one before you see a further decline. But good thing is that we know the levels. Good thing is we know what to expect the bounce. We know what to expect the resistance. We know the overall conditions. And you know, that's the narrative. That's the, so to speak, gameplay, if you will. All right. What happens if you take it to lower time frames, real quick? All right. If you take it to lower time frames, what we're looking at is, I'm still gonna make a trade, by the way, in a moment. I'm just walking you through my thought process, right? I don't know what trade I'm gonna take in a moment because I didn't look at the charts for a couple of days. I'm looking at it right now, right in front of you. What it tells me is we have the CTF, that is the current time frame trailer, bullish setup, but again, this is sideways, so it's most likely going to get interrupted. Most bullish setups, like I said, for the obvious reasons, end up losing if you hold it long enough, because it's a dominant bear market. So the bullish trends are short-lived by definition, and they're corrective. And we're facing the main resistance. So potentially, knowing that we're still in the larger time frame range, that is potentially building a larger breakout that I have no idea if it's going to come or not. We are somewhere around some high time frame resistance that is coming from the ATR base indicator of this high time frame trader on the daily time frame. So we're at the daily resistance. We're at the highs of the daily resistance. We are in this sideways that just kind of like by definition goes bouncing, you know, up and down, bouncing, you know, sell the resistance, buy the support, something like this. So it's very tempting to potentially take this, you know, kind of like a short or medium term trade to the downside, like a short. But at the same time, you know, 12 hours is not a time frame that I would use for leverage trading, right? Because through frequency, like I said, we need to look at the 1 hour time frame that I'm going to go there in a second. So what's happening on the 4 hour time frame? The 4 hour time frame, and here, if you watch the Bollinger Bands, this is the B-Pro version of the Bollinger Bands. It's the ATR bands, not standard deviation, okay? The volume cluster is here. It's pretty much reacting well, like here. You can tell that there is some reaction, and it might be accidental, might be not. But this upper band means that this is the expiry of ATR. This is where technically the trend should locally reverse if it is to reverse to the downside. So we are potentially in the long, like a short-term swing trade situation where we could play for the trend reversal. All right. So this means also that the sharper, darker shade band tells you that it's overbought, right? That there has been this misequilibrium, that there's been more buyers than the sellers, that the market technically has a lot of reason to go down from here, especially that this large candle was kind of like moving as a reaction to Donald Trump, kind of like, swinging left and forth, alongside his mood and all the manipulation. By the way, technical analysis is not gonna let you predict what Donald Trump mood is gonna wake up with tomorrow. Okay, it's not gonna tell you whether the Strait of Hormuz is gonna open. It's not gonna tell you whether Eric Trump or Barron Trump is gonna make another $100 million from insider trading from his father. Like, it's not gonna tell you this, right? It only informs you what the market tells you, right? It is the efficient information that the market processes and it spits you out on a silver plate, and this is what it tells you. This is what I am, right? So it is potentially looking at as a tempting mean reversion trend to the downside. If it does, however, then the previous, typically has the band to band kind of like a play. So the potential target of a short would be somewhere in this area. There is a confluence of volume and the volatility, so there is a double importance region in this, double reason to believe this is important and meaningful. So if the market were to reverse, I would expect that it may probably take out a little bit, some new high before reversing. It has a lot of reason to reverse between 72,700 and 73,700. Okay, there's also a decent, some local clusters, 74,000 approximately. So if it is to reverse, my blind guess is that we're gonna take out those highs right here, typically, because that's what happens. Kind of like when you have bigger stakes, you typically need to have the counter side liquidity. All right, this is why a lot of those liquidity hunts and false breakouts happen, because big traders to exit, right, to dump on you, if you will, they need to have enough liquidity, because otherwise, if they're going to dump big position on the market, well, guess what? They're going to have a lot of slippage and lose a lot of profit. If you have big money, you're going to lose millions of dollars in profit, right? And then you're going to drag the market down. So in order to avoid having to deal with this, you need to fake the breakout, right? If you have a lot of money, you can just, and you know that there is this clustering of resistance, because that's what technical playbook is, right? Then you can just play a little bit more, just break it out a little bit more, and then dump the whole position basically on top, knowing that it's going to trigger a lot of buy signals, and it's going to force out a lot of buying pressure, right? A lot of buying, traders, breakout traders, right? So if it is to reverse here, and I don't know it will, right? It probably is going to take out, somewhere around those highs, maybe 73, 74,000, and reverse, if I were to guess, somewhere into those 68, 70, 67, 68,000, right? That would be the potential playbook. But this is the 4-hour time frame, and I'm not sure we have enough time for this, so to speak, right? But that's we're taking down the time frame step by step. I'm saying enough time because guess what? On the timeline, it shows you from 12th or 13th of March until 21st of April. It's a 4 weeks or 5 weeks basically of price action. So that means if I were to take this trade, I may be right about it, but it's gonna mean that I potentially may be stuck for 5 weeks in one trade. So it's not going to make me win this competition. It's not going to make me win with one trade. If I were to even go on 10x leverage, right, and take this trade, it's going to take me like 10x leverage times 7%, profit basically to the downside. It potentially is going to take me like 70%. I doubt that 70% in a good month is going to get me a win. So if I were to win, I need to go lower the time frame. And this is the time frame that I have on my weeks account, upon which I'm going to make a trade. All right. So what we're looking here is, this is the Coinbase, so not so much, but that's the situation on an hourly trade. That's my time frame of interest. That's the time frame that I'm trading, right? Because the time frame that I'm trading here, adjusted basically for the time, is going to take me like a couple of days, so that I can wait. All right. If I were to we have 3 weeks here to show off. So I like at least 3 trades, right? So ideally probably would be even like 15-minute or hourly time frame, right? That's the best that you can get. All right. Apologize. Yeah, that's correct. Please smash the likes and share along the video. I appreciate you, by the way, watching this. Let's go, BNO. Good to see you. I got stopped many times in a profit just to save a few extra. Exactly, then straight up. Exactly this. So, that happens. Just keep watching the market and learning new ways, because you are probably missing technical things. Beat you up using the order, so you resign. Something like that. Okay. Yeah, so when would the bearish structure be invalidated? Again, it's time frame dependent. All right, it's time frame dependent. I'll explain a couple of time frames and how it differs. So let's see. Let's actually go to the trading terminal right here. Again, $10,000 in the account. I'm opening the Bitcoin market right now. Again, $10,000 here, right? To prove it's real money, it's USDT. And we're searching for the right spot for a trade. Maybe it's a good trade, maybe it's a bad trade that we're gonna take. I have no idea if it's gonna be a win or a loss, right? All I know is that I have $10,000 and I have to decide basically, what sort of trade I'm looking at. So about those trend regimes, if you remember, right? What trade regime we are in? Like we agreed that we are in the daily time frame at the bear market, right? So the trend overall is down, which means that the rallies are going to be sold eventually. So if there is a rally, it's just a matter of time until it's going to get lower. That's what constructs a bear market. So we know that any pump is going to be short-lived. It may take a couple of weeks, couple of months, but it's gonna die. And we know that we've already been 2 weeks that out of something that technically lasts anywhere between 3 weeks and 3 months. So we don't have more than, I'd say, 2-3 weeks, maybe by the end of the month. Like I said, April is typically bullish. So maybe it's just the April that we're going to have a little bit of the brief. Maybe just the April that we're going to have the pump into like 80,000, maybe 90,000. I have no idea. I showed you, explained all the resistance and all the concepts behind it. And so that's a medium-term perspective, right? Otherwise, we are sideways. We don't have the confirmed. We don't have the confirmed breakout. We're looking at something that potentially might be looking like a breakout, but it still needs to go like over $76,000. So we know that $76,000 is probably going to be, like I said, this critical level. So if you are playing longs, you're probably not going to get like a very good asymmetric trade basically towards $76,000, right? If you are to expect some downside, like first of all, you have 69,200s by design of the volume. That means that this is the gravitate. This is the level towards which market is going to gravitate. If it falls, we have a decent breakout on the short-term time frame from the Bollinger Band. And to remember that it's not ATR here, but it's standard deviation, so it's more statistical, mathematical than market price. ATR is a volatility from the market. Standard deviation is a volatility from the statistics. It's a little bit different, right? It informs similar things. At times they're going to look similar, but ATR is more accurate. Still, the trend following methodology, right? That, like I said, arguably is not the best on lower time frames, because the lower the time frame you pick, the more noise there is going to be, the more randomness is going to be, the more coin flip it becomes, the more casino it becomes. And there's nothing bad with this. You just need to have less technical analysis and more casino strategy, right? Like martingale or anti-martingale, for instance. When you flip a coin and you lose money, you need to double down on the martingale, okay? When you double down and twice up the size of the money that you lost, for instance, you lose $100 and you lose, all right? If you flip a coin again and you lose, then, another trade you take is $200. If you lose it again, another trade is $400, right? And see, if that's the third trade, and eventually it's like 50-50, it's gonna go up and down, right? It's just a matter of time until it goes up again, like coin flip. Then statistically in the long run it's 50-50, right? But if you are like I said, the third trade, $100, $200, $400, you make it twice every trade. Basically you double down on every trade, every loss. Then eventually the money you paid, right, was $100 plus $200, right? And the next one is $400. But if you won for $100, eventually you're gonna pay back for all the small losses, right? So that's the martingale. Anti-martingale is double down on every win. So every time you win, you pyramid on top of the position. You add to the position. The problem with anti-martingale is that in the trading, is that eventually the market inflates very aggressively, that you don't have this type of aggression in the randomness and the poker and the martingale and the casino and roulette and stuff like that, simply because there are no trends, there are no those consistent trends. Everything is due to the chance and due to mathematics. Here you have people literally manually pressing the buttons, and this is making the market go up and down, right? So it has less to deal with mathematics and more to do with people's behavioral psychology. So trends and are more visible on the longer time frames, and the lower time frames are more like casinos. So different strategy. Okay, if you were to play 5-minute time frame, it's not going to be much technical analysis, right? It's going to be much more poker rules. Here on the hourly, like I say, there is some clustering on the volume right here, weak volume, but it's something. Is this the right? I should say, is it the right high probability win on the trend? I don't know that technically, because first of all, the best trends or the best trend trades are after the inflection following the bear, kind of like a trend reversal. Here we are in this upward movement that we have no idea how long it's going to take. All right, so if we are entering, we're not entering definitely anywhere like freshly after the correction ends, but rather entering somewhere in the late stage of the upward trend already that developed from $67,000 or $65,000, all right, just a couple of days ago, all the way here. So we're entering late. We're entering after like the fourth rally. So it's late. It's risky, right? So what I would say is that potentially knowing that we're sideways, knowing that we are near the top, I would be tempted to, first of all, we're locally sideways here on the price structure side, right? I think I would have better odds, better probability, but maybe less of a profit, but better probability, slightly better. But again, it's like 60-40, right? Of shorting this. If I were to short this, the counter indicator to this would be that it's a bullish breakout above this volatility, means that market is pressing higher, right? But it's not pressing much yet. Plus, I'm gonna use a stop loss. Plus, the potential downside here is this, right? So if I were to take a down trade, it is gonna be much more asymmetric. So it's gonna be probably a better what do you call that? Like a better, more profitable, right? Let me get you what I mean. All right, the long position, if I were to play it, it's gonna be something like this, right? And here you like don't pay attention to this. I'm gonna like have to adjust the stop loss and so on, and the sizing of the position based on this. But the whole concept is that selecting the trade to the upside, I would expect that it's probably gonna get some reaction around 76,000, so you can potentially win. Let's say I'm not gonna take 25x for sure, maybe 10x, but maybe even 5x. Let's say it's gonna get me. What's the potential win on this, right? 5x on 5% is like 25%, right? While potentially losing 2%. Here, I could apply, since the stop loss proximity is gonna be much lower because the trade would be invalidated around this. So it's like twice as much money. So I can potentially play twice larger leverage, like 10x with the same money risk. And this could potentially get me the downside for like almost 4%, but 10x leverage if I were, right? So it's a more asymmetric bet to the downside where you risk less or you can win more for the same amount of money invested, if that makes sense. And it's very tempting. It's very tempting, all right? The only thing I would need is that the range trading regime, if you remember, had to be that the range that we are in is wider than the ATR, and that there's kind of like the volume decline is something as well, but I'm just searching for something from the past webinars that I told you. Give me a second. All right, anyways. So what we're looking at here is oh, there my man, good to see you. So the good thing is that we're looking at let's put it on the larger screen, is that we have pretty, like I said, pretty good asymmetric trade. And again, just mind that this is all very much different than what I do on the medium term, right? On the medium term, I have a system, I have algorithmic trading and so on. So this is discretionary. I'm trying to make an opinionated guess in front of you. So it's different, which is why at times it may take longer. But this looks to me like a potential better deal for the local reversal, right? It probably is gonna cut the high a little bit, which means that if I set the stop loss, right too tight, I'm probably gonna get stopped before the market reverts lower. Lot, of course, is dependent on whatever Trump is gonna do. So just forget playing leverage with no stop loss when Trump is on the run, right? Because that can turn into 76 or 80,000 in a matter of hours. So if you use it if you leave it without stop loss, right, you're gonna get wrecked, like, absolutely, just because Trump mentioned something. So not worth risking. And what else? Stop losses, by the way, use stop losses based on ATR, okay? Not based on like whatever number you say. So ATR, technically stop loss should be 2 ATRs, right, on your entry. Unless you're playing short-term trading, then short-term trading, kind of like on the range trading, is probably going to be defined a little bit more here by the swing highs and the swing lows rather than the average, the ATR. Okay, but to keep it safe, as you probably want the ATR. All right, so let's try to make a trade out of this. Let's try to construct this. Okay, I'm probably forcing the trade a little bit in front of you just to show how it works. But if I were to place my guess, I think it would be like this. I'm probably gonna get stopped on this, so I'm probably gonna get a little bit more stop loss distance, probably, which means it's gonna take my size out. Maybe I'm gonna get lucky, who knows. If I were to set again, set the take profit, probably part of the take profit would be here, and definitely before, like here, right? Just maybe we're gonna catch some, like, a larger trend reversal. Like I said, since we're entering something with a history of already a good run up. So the market has been running up from $65,000 all the way up here. So it's up a lot already. It has a lot of reason, to like 10% up, right? So it's unusual for the market to keep going up forever, especially in the bear market. So the potential take profit would be around the range lows. That is here. That is the range trading principle. The only thing is that I would probably like more to buy the support, since the trend is overall up. It means that buying support has better probability win than buying resistance, than selling resistance. But in the end, I think that's the trade that I'm gonna take. All right. So trying to capture this range high and the sideways regime of an overall, that's the trade thesis right in front of you. In front of a market that's already has a 10% run up, It has a potential, of course, to head over to 675, 6,000, especially when Trump mentions something. So I need to secure it with a stop loss. And when there's no stop loss, just forget it, no leverage. So it means a stop loss, it means a leverage. Probably I'm gonna go for like 5x leverage, maybe 7x leverage, maybe 10x leverage. I'm gonna see in a second what fits best. But I'm only taking I'm only considering high leverage simply because like 5x is the benchmark, but I would only consider taking high leverage because we're in the close proximity of the resistance here, potentially of the range high. Like I said, we're probably gonna get a little bit more here on the upside. So I don't want to set the stop loss right above this swing high because that's exactly what everybody else is gonna do. So I need to get a little bit more space there, which is gonna impact this position size, reduce the position size of mine. We have a little bit of the there's not much volume spike. I'm trying to figure out if this is the right trend trade. It has a little bit of the volume spike, which is trend trade positive. We have the ATR spike, which is trend trade positive. So what it tells me is that if I am wrong about this trade, it's probably going to run up more aggressively towards like $76,000, right? Because if I'm wrong about this being a reversal, then it's probably going to reconfirm, something of a stronger run. So if I'm wrong on this one, I'm probably going to flip fast, basically to make it at 76. So that's going to be my backup. Otherwise, I think it's a good, more asymmetric bet, like a more asymmetric again. So not more probability, but more asymmetric. You're going to have more profit, but it's going to have, I should say, this looks a little bit like a trend trade setup, except that it's extended and exhausted already, right? Otherwise, normally if you've traded, watched the past webinars and so on, you've seen how the trend following works on the Bollinger Bands and SMA 20, right? You know that you're gonna buy the breakout of the Bollinger Band because that means the price is pressing, the market is pressing against the unusual volatility to the upside, especially if it's backed by ATR and volume. The volume spike isn't big, so it's not much convincing, but at the same time, it's not so much necessary for it, right? It's supportive, but not necessary. But that said, I'm gonna make a bet simply because I have better profitability if I win it. No one knows if I win it or if I lose, but if I win it, I'm probably have a little bit more upside in terms of the profit to be made on the same amount of money rather than playing to the outside on the breakouts towards 76,000 or something. All right, so this trade is gonna look a little bit something like this. So I'm gonna have an opening price at around the market 72,300. All right, the stop loss itself, we're gonna take a look at in a second, but the stop loss itself should be at 2x, basically from the average from the entry, 2x ATR. That is $1,000 approximately, right? So we're gonna see a move how it impacts the position size, and I'm gonna decide if I'm taking a 2% risk or a little bit more. Someone asks me, why don't you just wait to see the reaction at the level? Well, I don't honestly have 5 hours or 10 hours to sit here at the webinar with you. Probably you don't have this time either. So I need to take a bet, right? And plus it's live trading. So I'm a little bit forcing this trade, but it's not looking bad at all. All right, so let's move here and try to make a trade out of this. All right, so I have this position size calculator that I'm setting the entry price for here approximately, setting a stop loss potentially for here, but I'm going to move it in a second, and a potential something like this. Okay, so let's make it bigger here. And what are we looking at? $10,000 is the account size. The 2% risk, I'm gonna take like 1.85, for instance, because 1.9 because of the fees and everything else. The stop loss itself, like I said, we want to take it to ATR stop loss. Like if you want to be, let's see what it's gonna do. To ATR stop loss, it's 2x 533, so it's like 1,066 added on top of the current price. So it's what is it? It's 1,000 upwards and 66 upward. So it's 329. The current prices is like 330. 1066 makes it basically like 73 396, right? 73 396, something like this, right? But see, for the like we are very close to the round number, so I would say I would prefer probably putting this a little bit above the round number for what I mentioned, right? Something like this, for instance. So it's going to be a little bit more than ATR, than 2 ATR. And what's the position size? All right, the position size for a potential 40% profit is going to be $820 out of this $10,000 account, right? So if I win this one, potentially it's going to give me $328. Is $328 worth it for the $10,000 account? It's like 3% account. As a matter of fact, I'm not sure, honestly speaking. All right. So what I'm thinking is, what if we adjust the stop loss to make it a little bit less generous, so to speak? Make it like 73.17. Maybe make it a little bit less aggressive, a little bit more aggressive, I should say. Right. The entry price changes like 260. What's it gonna be this time? The potential win is like 718, 711. 7% account. I mean, I can live with that, but it's honestly not the best. All right, 700 potential win. It doesn't sit with me well. Right? It's like it's barely worth the challenge. It's barely worth the trade. Right? So here I have a choice: play it a little bit more riskier, right? And risk more and lose more potentially, or I'll just use less leverage. Okay, but less leverage is going to mean less. Like if I go for 7x, for instance, right? It's not gonna give me. I'm gonna pay less in fees, right? That I can potentially make to. Let's say if I go 5x, right? I'm gonna pay less money for the leverage for the same outcome. All right. The good thing is, and if I were to put 3% risk, potentially, okay, that's something that we can play with. All right, because see, there's the golden kind of like a rule of thumb that you can play with 2% risk. The problem is, again, that 2%, like you see what happens. I'm fighting for $300. I would say personally, I'm not saying like you're there to copy it, but I would say that you have to decide what's really worth it for you. Me, I'm saying it's probably not worth all this push and challenge to try to win $300. Not even $700. $1,000 on the 10K account is something okay. 10% account growth on one trade is something okay. I can live with that. Okay, so what I would do is I would do a 3% account trade. Okay, 3% account risk. And right now the prices is like this. It's like a little bit like that. And it's potentially giving me like 20% ROE, but about $1,000 account win. Okay, that's something that I can play with. So that's exactly what I'm gonna do. Okay, I'm gonna take this trade. The market is a little bit lower. Let's see, but I'm gonna take a short. I'm gonna take a 5x leverage. I'm gonna risk 3% of the account somewhere over here. I'm gonna try to set up, let's say, 533. The multiple of that is gonna be a stop loss of $700. Let's say 73. What is this? 73 something, right? 70, a little bit higher than the round number. So it's like this. There are some local declines. That's okay. It would probably be wise to see there's like a little bit of a, fake out on top, which likely means it's gonna go sideways before going up, or literally go down immediately. So it's not convincing on a lower time frame. It probably is gonna go towards like 71 for 500. So I'll probably be better not wait too much, right? Otherwise I may not get it. So the take profit point is gonna be definitely higher than this. So it's gonna be potentially, let's open it up. I'm just trying to figure out where did that go for the leverage calculator. Oh, there you go. Okay, so they've already implemented the trading stop. Okay, you remember, Weeks? We spoke about them implementing the trading stop, and they did it for you, right? We asked them to deliver the trading stop, and they did it. So it's just the updated stuff. Okay, and there is the futures calculator. So they made it basically better. Okay, so that's the stuff. I'm gonna set the stop loss right after. So opening, where's the, hold up, open short. Okay, so they changed open close. Okay, they made a little bit of a change. There we go. So I'm gonna open the short position. Okay, and that's what I want to do, short. I want to go for the market. Oh, come on, it's dropping fast. Okay, I want to go for the market. I want to go for, where did you go? So in order to position myself here, here we are, in order to position myself for a 3% risk on this, $1,000 account, I'm risking basically losing like a $300 versus winning $1,000. So it's like a there you go, 3.4 R, right? Okay, win. So it's potentially lucrative, so to speak. That's a nice asymmetric deal that I would be taking. Let's say 160 here. The stop loss, the stop loss would be approximately that, 69.426 or something like this. And that's exactly what we're gonna do. Okay, so let's go here. I just realized that you didn't see all the stuff that I was sharing. Oh shit. All right, so I'm here on the opening. I'm gonna play an open short with this $10,000, right? We know the stop loss. We know the stop loss to make it 73.017 that there was. We want to go for the $5,000 margin. All right, so like half the account at 5x leverage. That's exactly what's going to put me at like minus 3%. There you go. I want to take the profit at around 69, 69, let's say a little bit higher than what we had, like 477 for instance, right? 87, we wanted 377. We want a $1,000 win at least. Okay, what's it gonna have to be? 12, 15. Okay, it's possible. Okay, it's possible because it would mean it's gonna come right across this this volume, kind of like a level. So it's a potentially $1,000 win on a 50% account, on a less than 2%, less than 3% risk. Probably with the fees is gonna all compound to like a 3% win. The stop loss is 73.017, so it's a little bit higher than the spike here. It's a little bit higher than the round number. If I get stopped, I lose 3% approximately. And what it means in practice, like, you can have, just try to simplify this, okay? You can, it's not like particularly like that, but you can simply think of this as you can have 3 losses of 2% or 2 losses of 3%. Okay, like there is a compounding in this. This is geometric. This is, multiplication. So it's not going to add up just like that. But this is on the low percentage terms. This is, this is addable like that. Okay, so let's give it a go. Open short, boom. Okay, and the short is running. So I have the stop loss 73.17. I'm potentially winning 69 to 1.5 for a potential $1,000 win. That is going to be like a like it said here, like 18-20% almost win on a $5,000 margin. And that's it. If I lose, I lose 3%. But then if I lose, it means probably I'm gonna have a better trade to the upside towards $76,000. Right? I have stop loss set. I have that I know is gonna lose me probably a little bit close, like 2.7, 2.3, 2.93% with the fees and everything. If I win $1,000. I'm risking free, highly asymmetric trade. I have no idea if I'm gonna lose, if I'm gonna win. It doesn't matter. All I know is that the trade is done, and we've been running this for already an hour and a half, so it's a little bit long and it's a little bit late. My coffee is missing. And what we're gonna do next, all right, what we're gonna do next is I'm gonna, of course, as always, update all the trades basically live. Okay, there you go. I'm gonna take and update all the trades live here, and take this trade that I did, put it up here, and say to our community, new webinar trade is running. Boom, everyone. Okay, new webinar trade is running, so that no one says I didn't inform them. Short 5x leverage on the thesis broken down during the webinar. Daily downtrend, 4-hour sideways, potentially nearing 76K. But first, we are looking at highly asymmetric, which means low probability, like probably less than 50%, because the more asymmetric it gets, the less likely it gets. Okay, so we're looking at a highly asymmetric trade of 3.4R. So I'm potentially winning 3.4 over what I'm potentially losing, for 3% potential loss on the account in an attempt to catch an over $1,000 basically return. Let's put it this way. All right, the thesis is, the trade thesis is that we are looking at well developed uptrend in some later phase, or uptrend in later phase of development. Right, so it's been developing for a while, and is sitting at plus 10% change from $65,000 lows. And in bear market, uptrends are rather sold, short-lived. Okay, that's what makes it a potentially nice short trade, the chance is the high is gonna get knocked out before running lower, which is why we put stop loss above round number of 73k basically. Right, so it's this. I'm gonna keep you guys updated. It's the entry price. Let me put some details. Okay, it's the entry price. That's the first trade. That's how we make a trade. Unrealized, blah blah blah. Position, the take profit. Basically, trigger price is this. Take profit. No, and stop loss is 60, blah blah blah, and stop loss is this. Okay, leverage is 5, and what? And that's it. All right. So that's the trade, and I'm putting that in the accountability channel as well to say and inform that a new trade is running. Okay. Boom. New webinar trade running. And we're gonna see, we're gonna update it, we're gonna watch and monitor basically and make sure that all the trading is done and shown to you. Okay, so stop sharing this one. How do I take it off? Boom. And what can I say? It's been pretty much a long session. I overstretched it. I probably talked a little bit too much in the beginning, but like I said, I wanted you guys to know what you can expect, how to trade, how to set the first trade. You saw that this is real money, no some bullshit and so on. This is real trade, and I'm trading with you. All right, I explained the concepts, I explained the rules. If you guys have some questions, I've answered some already, but well, feel free to ask them. And if you haven't joined yet, let me remind that you can still join this, guys. Okay. And all you need to do is go to our Whoop. You can go through my pinned Twitter post, right, or go directly to Whoop. We're gonna make sure to put it in the video description to this. But go to the web, go to the theburbnest, whoop.com, theburbnest, right, .com/theburbnest, for instance. And if you're gonna go there, like I said, it's gonna take you to Millionaire Speedrun there on the bottom. The Millionaire Speedrun, just join the waitlist. Like I said, put your week's ID. This is the link. Again, this is the link that you need to sign up with, right? This is the affiliate link that we have that basically unlocks it for free. This is the trackable link, something that so that we can see and track if you actually joined, if you're not. Because, you know, like I said, there's no backseat drivers, there's no bullshit people, there's no idiots, no trolls allowed, basically people who are gonna try to, you know, be smart and game the system and so on. If you wanna come here and, you know, get all this access to this information, access the learning trading path, learn accountability, learn transparency when each and every single trade is discussed basically, and have it all in 3 weeks competing for $20,000, well, that's exactly what you get, and it's cost you nothing. All it does, it takes a couple of minutes to sign up with the ref link, and that's it. All right, then put your week's user ID. Like I said, it's easily on the top of your account in weeks, and take a couple of minutes and you're in. All right. That's it, ladies and gentlemen. I've been your host for today's session. Yeah, it's gonna, so let me tackle this. It's gonna be saved. We're putting each and every single webinar inside of the account on Whoop for everybody, so that it forms some sort of like a continuity and course so that everybody can track it. All right. So we deposit those trades. First of all, it's on YouTube. Second of all, by the way, this is a public webinar. All right. Not all webinars are public. Most of them, except like all of the webinars except for 2, this one and the previous one, were actually unpublic, were closed, right? We're only for the community inside of our Discord, only for the Millionaire Speedrun. And that's exactly the theme, okay? Only the Millionaire Speedrun participants can participate in the webinar, unless I'm opening tier 3, unless I'm opening a huge challenge right in front of you, okay? So if you haven't joined yet, go to whoop.com, theburbnest, and join the waitlist, and we're gonna take you in basically today, and you can trade with us. You can get and follow my trades, and it's all free. All right, and all it does is Well, listen, I didn't even want to convince you. Like, if you prefer doom scrolling, just go back to doom scrolling. I'm gonna like, I don't have to prove anything. I made money, you know. I'm rich. Like, I don't have to prove anything. I'm here sending the elevator down. I'm here trying to save you 10 years of pain and losses and desperation. You know, and the things, all the mistakes that I did, simply because I did not have that what I'm giving to you when I was starting, right? And perhaps it's gonna make you an independent trader. Perhaps in 3 weeks, some of you are going to win $10,000 each, right? There's 20K funded by sponsored and sponsored by weeks for the winners. Just maybe you're going to walk out after 3 weeks being, you know, a self-independent trader who's going to trade for a living and be financially free. And you're going to make your future kids proud, right? I don't know that. But all I know is I'm putting something valuable right in front of you, and just maybe you want to use it, all right? So this is the shortcut that I didn't have when I was starting. God bless you. I'll see you around, and thanks for